Hello everyone and welcome to our show today. Today we're going to have a first ever event. This is the first time ever I've actually put together a 30-minute session for you instead of an hour session. Usually our sessions go about an hour long, and as you know, they're packed full of information. But upon many requests, I wanted to go ahead and do a shorter segment and see how things go today. We maybe randomly do some 30-minute amongst hour-long sections. So that being said, we don't have a ton of time, so we have about 30 minutes to get through a lot of great content, so let's go ahead and jump in. So today what we're going to do is we're going to talk a little bit about an overview of business credit, from what business credit is, how it works, how it compares to consumer credit, to giving you an idea of how to build business credit. We're going to walk through the steps of building business credit, talk about the benefits of why you'd want to build business credit. This is like a 30-minute everything you need to know about business credit, all in a short 30-minute segment. So that being said, let me first introduce myself. If you've never been to one of my events before, been to one of my shows before, my name is Ty Crandall. I'm actually the Director of Business Services here at Credit Suite, and what we do is we help customers get business credit and financing. And we have a huge partner network that works all around the country that gets customers, we help customers get business credit with all aspects of building their own business credit and all aspects of getting financing. So I'm not going to be pitching you on anything today or selling you anything. This is just going to be 30 minutes of straight information. So if you do want more information about us or more information about getting business credit and financing for yourself or offering it to customers and making a business out of that, then check us out. There's our website, creditsuite.com/business credit is where you can learn a little bit more about us and how you can make money with offering business credit as well as building your own. So enough about us. Let's talk a little bit more about you. So when we talk about business credit, it's important to understand that there's really three types of credit that every business has. And this is important because most entrepreneurs do not know this. They only are familiar with the first, which is the consumer credit of the business owner. So as a business owner, you actually have three types of credit. The first is you have your consumer credit, which is the credit of you as an individual. You then have bank credit, which is an internal credit score that's actually offered by banks, and you actually have business credit. So those are three types of credit that as an entrepreneur and a business owner you really must be familiar with, because being familiar with these types of credit is really essential, because whether you want loans, whether you want credit cards, whatever kind of money you pursue for your business, one if not all three of these types of credits will be being looked at. So let's first look at consumer credit. Well, most business owners are already familiar with the consumer credit that reports to the consumer credit reporting agencies, TransUnion, Equifax, and Experian. Your scores range from 350 to 850. This is a little different if you're looking at Vantage score, but FICO score is the most widely used model, and that is their range. And the credit is linked to your social security number. So when you go in to apply for something and you're filling out an application and you give them your social security number, they're going to look at your consumer credit and make lending decisions based on that consumer credit. Now, the second type of credit is bank credit. Now, most business owners don't know that banks have their own internal scoring system for businesses. Okay, and this scoring system is known as bank credit, or you'll sometimes see me put out information referring to this as a bank rating. So bank credit is the type of credit that it actually is. And the actual credit score itself that banks use is called a bank rating. Now, this score is based on how much you manage in your business, or how you manage your business bank account. It's primarily based on how much money you keep on average in your business bank account over a 90-day time period. But there are other factors that actually tie into this. Now, I don't have a bunch of time here to go through that. So I actually put together a free resource for you that walks you through how bank credit works. And this is of extreme value because there's just not a lot of information out there. I mean, if you Google bank credit or bank rating, you'll find very little information on this. So because there's so little information about it, we decided to put together a resource. It's like a 38-page guide that teaches you everything about the bank rating system. Now, unfortunately, I do not have a web page up yet for that resource. So I wasn't able to provide it here during this event. But what I did do is you can visit creditsuite.com/EIN credit. And there you're going to find a free 4-step guide on how to build your business credit. If you do opt in for that guide, I think within 4 days you'll be emailed that special bank rating ebook that I put together. So it's a special guide, has everything you need. I don't have a landing page. You can grab it directly right now, but if you go to creditsuite.com/EIN credit, that will then give you what you need to actually go in. You'll get another free guide, which is really cool. It's really hot on Facebook right now. And then in about 4 days, you'll get emailed that bank rating book. And that'll give you everything you need to know about the bank rating system. Now, the third type of credit is business credit. Now, a business also has its own credit profile, which is known as business credit. It's also sometimes called corporate credit. Now, credit reports to the business credit reporting agencies instead of the consumer reporting agencies, and the business reporting agencies are Dun & Bradstreet, which aren't in the consumer reporting game, and Equifax and Experian, who are in the consumer and business credit reporting game. Now, scores usually with business credit range from 0 to 100. Now, I say usually for a big reason. Look, there's a lot of scores in the business world, just as you have a lot of scores in the consumer credit world. Okay, but in the business world, for example, with Dun & Bradstreet has 5 credit scores that they'll rate you on, and Experian and Equifax also have multiple scores that they rate you with also. But the primary scores used in the business world, IntelliScore, the Small Business Risk Score, Dun & Bradstreet's Paydex score, these range from 0 to 100 primarily. So the main scores you're going to be dealing with in the business world range from 0 to 100. But again, don't let that fool you. There's a lot of scores in the business world that you might run into beyond just your primary scores. And credit's linked to the business EIN number, not the owner's social security number. So huge difference here. When you fill out a business application and you put your EIN number on that application, well, they're going to pull this credit. They're going to pull business credit unless you also supplied your social. And if you supplied your social security number on the application, they would pull both. They would pull your consumer credit, they would pull your business credit, and if it was a bank loan you were applying for, they would pull your bank credit also. So it's important to note that with business credit, it is linked to your EIN, but if you were to put your social security number on the application, they would pull both. They would pull your business credit and your consumer credit. But business credit in itself is actually credit that's linked to your EIN, not your social security number. It's a whole other separate credit profile that you have. So there's a ton of benefits that business credit provides you. First of all, there's no link to consumer credit at all. It's 2 completely different scoring systems, 2 different reports, 2 different types of credit. They are not linked. So no personal credit check is required. And this is why you'll see advertisements, probably not for many people out there other than me, because there's not a lot of people out in the business credit space that will promote that you can get this credit regardless of personal credit. Well, you absolutely can, because when you build business credit the right way, you learn how to not include your social security number on the application. And as we all know, nobody can pull your consumer credit without your social. So if you were to leave the social blank, well, then they can't even look at your consumer credit. They're only looking at your business credit at that point. And these accounts that you get using business credit report to the business credit reporting agencies, not the consumer reporting agencies. So that's very important to you for a couple reasons. First of all, 30% of your consumer credit score is made up of what your utilization is. So like, for example, if I have a credit card with a $1,000 limit and I have a $300 balance on that card, I'm utilizing 30% of that limit. And any utilization of 30% or higher lowers your consumer scores. So if you went and got a $1,000 Staples credit card and you personally guaranteed it and you used your personal credit to get it, then if you put more than $300 worth of supplies on that for your business, you would hurt your consumer score. Well, you don't want to do that, because that affects your ability to get mortgages, car loans, personal credit cards, and everything on the business side. So when you use consumer credit for business reasons, you tank your consumer credit score. But with business credit built the right way, that's not linked to your consumer score, there's no link. There's no personal credit checks. You can get approved regardless of personal credit. And on top of that, there's no personal credit reporting, so you could utilize those counts, even max them out, and your consumer credit scores wouldn't change even 1 point. Now, another benefit is that there's no no personal guarantee is needed in most cases. And obviously on this slide, I, for some reason, didn't put the word guarantee here. But no personal guarantee is required in most cases with business credit. Now, there are some sources out there like Home Depot that will want you to be in business for 3 years to get a no personal guarantee account. But most retailers out there will approve you with no personal guarantee if you have established business credit. So what does this mean? It simply means you're not personally liable if you were to default. So that means if you get a business credit card for $5,000, something happens, you're not able to pay it, your business goes out of business, there's a lot of factors that can affect you in a business and create cash flow problems, a lot of which are not even within your control, as we've seen in years past with the shift in economy. So if you default on that business credit card, they cannot come after your personal assets. With most credit you get for your business and put your social on there and sign personally, well, they'll come after your personal assets. They'll take your home. They'll take your bank accounts, even if it's a business debt. So with business credit, there's no personally guarantee in most cases, which means you're not personally liable for the actual debt. Now, credit limits are 10 to 100 times higher with business credit than with consumer credit. This comes right from SBA themselves. So that means if you're used to having a $1,000 credit card limit with Staples, on the business credit side, you're probably going to get approved for $1,100 to $10,000 limit. So you can get much higher limit accounts with business credit than you'll ever see on the consumer side. And you could build business credit a lot faster. We see clients get to $5,000, $10,000 credit card limit accounts with Visa, MasterCard within 6 months, sometimes as little as 4 months. You could never do this in the consumer world. It could take you 5 to 10 years to be able to get a $10,000 revolving account in the consumer world. But in the business world, you could get a $10,000 revolving account starting from nothing within 6 months' time. And later in this actual event, I'm going to show you exactly how to go about doing that. Having business credit increases the value of your company, just the way that it is. If you're going to buy a company, you're going to look at their business credit. If you see a company that has multiple credit lines, available credit, that company is going to have a lot more value than a company that doesn't have any credit or hardly any and looks like they're completely unestablished. And just so you know, anybody can look at your business credit reports. Anybody. I can go right now. You could tell me the name of your business. I could go on to my own credit monitoring service and pull your business credit reports. Anybody can do it. It's not like it is in the consumer world. So anybody that's going to want to buy your business knows this. They're going to look at this information. You won't need financials or collateral to get for approval. So this is also very important because, again, most clients we see don't have business collateral, which is required for conventional and SBA loans. And a lot of them write off everything they can and show little to no profits. Well, with business credit, those things aren't even a factor. So with consumer credit, just because you have a Social Security number doesn't mean you have an established credit profile. You know, for example, a consumer credit profile and score, you've got to first get approved for accounts that report to the consumer credit reporting agencies. You've got to use those accounts. You have to pay your bills for those accounts. Then and only then will you have an established credit profile and score. Okay, my son, his name is Cash. He's 5 years old. He has a Social Security number, but he doesn't have a credit profile because he hasn't followed these steps. He's never gotten approved for accounts, used them, and paid the bills. So even though he and my daughter even has a Social Security number, neither one of them are old enough to have credit because they haven't taken these steps. Well, exactly the same thing is true in the business world. Just because you have an EIN doesn't mean you have a credit profile and score established. For you to get a credit profile and score established for your EIN, you have to get approved for accounts that report to the business credit reporting agencies. You have to use those accounts. You have to pay those bills. And then and only then will those accounts be reported to the business bureaus, and that's when you'll have an established credit profile and score. So Entrepreneur.com reports that 90% of business owners know nothing about business credit. So if you're one of those people, don't feel like you're out on an island. Most business owners truly don't know about it. You know, it's usually reserved for established businesses or those that meet a certain criteria for approval, and often is used by companies that are big enough to have a chief financial officer. You see, most business owners, the people start a business, they don't know anything about business credit, so they do it on their own dime. But as businesses get big and you need a chief financial person to handle your finances, those people know about business credit. So that's usually when a lot of companies start taking the step step of getting business credit because they don't even know about it until they have a chief financial officer in place that does. But the reality is any business can actually build business credit. The key to success is knowing this formula to be successful, knowing this formula that you have to follow to build business credit, and knowing what steps to take in what order that I'm going to be outlining for you during the show today. If you know the formula and you know the steps to take, any business can build business credit. It's just usually this formula, usually these steps aren't widely known and only known by financial minds that usually get involved after a company's well established. So the first step that you're going to want to take in building business credit is that to know this. You've got to make sure your business is built credible in the lender's eyes. You see, business credit, it's not highly promoted in stores. This is why most people don't know about it. You go to Target and check out. Target offers you 20% discount if you get their credit card. But you might not know that Target has a business credit card that you could get leaving your social security number off the application. You don't know that because they don't promote it. Okay, so usually only larger businesses take advantage of it. And quite honestly, credit issuers and lenders like it this way because usually these larger companies are more established and have less of a risk of default. Look, if you look at any statistic out there about business failure, you'll see one thing, common trend. The longer a business is open, the better percent they have of succeeding. Most business failures happen within the first year to 10 years. And then when a business has been open 5 to 10 years, their chances of going out of business is very slim. So credit issuers and lenders don't promote it. They like the fact that only smart-minded financial people know about this because that kind of keeps the high-risk people away from applying, and it only keeps it in the hands of low-risk people. But again, it's not actually the size of your company that they look at for approval. To get approved, your business just has to pass this test they have, the secret test that shows them that you're credible, no matter your size. So a lot of people think, well, I got to get big to get business credit. No, not at all. You just have to know the lender's formula for approval and pass this test that they're going to take you through. Because when you fill out the application, that's what you're doing. You don't know it, but you're taking a test. And if they like the answers you've given to the test, you pass, you get approved. But if they don't like the answers that you put on the test, you fail, you get denied. So if your business passes this test and you're credible in their eyes, you'll be approved for business credit. Many times you get approved automatically by the computers without someone even looking at the application. We're all familiar with this. We all have been online and got instantly approved or denied when we went out and filled out a credit card application online. Nobody manually looked at your app. They took your data, they processed it through the system. It's a series of check marks. If they check off everything they're looking for, you get approved. So your business size, how long you've been open, aren't really the driving factors for your approval. Again, don't get me wrong. Companies like Home Depot want you to be a certain size. They want you to be in business 3 years. But most credit issuers aren't that way. Passing the test is the key to getting approved, not the size of your business, not how long you've been open. This means even if you just opened your doors yesterday and have little or no revenue, you could still be approved with most business credit sources as long as you pass this test. Okay, if you go to my actual YouTube channel and you look, and you can just type in Ty Crandall on YouTube or business credit and you'll easily find me, you'll see comments from actual people that have watched my videos, and one of them I just saw this week said, hey, man, this is awesome information. I had no business credit, followed your advice, now I just got my second or third business credit account for $1,000. So any business can do this. We see clients do this all the time, even as new businesses. So let's talk about this credibility test. Well, first of all, you've got to have a physical address or a virtual address. You cannot use a home address. You cannot use a post office box. You cannot use a UPS type box. Now, if you don't have a real physical address, look at a company called Regus, R-E-G-U-S. Regus will then help you and can help you get a virtual address. It makes it look like you have a physical address even if you don't. You'll need to have a business phone number, preferably a toll-free number, and it needs to be listed with 411. Very important. You will not get approved even for starter business credit accounts if you don't have a phone number listed with 411. You can go to Ring Central and get a phone number there. You just can't use a cell phone. You can't use a home phone on your business applications or you'll get denied. And yes, they know if it's a real business address or a real business phone. They know. They have the same technological checks that we use. Our clients, we have them, when they're filling out their application, they go through a check that tells them if their business address is a business address and their phone number is a business phone number. It's the same check lenders use, so they will know. You should have a business fax number. I mean, to do business nowadays, you pretty much need one. You need to send faxes. You need to receive them. You're going to need a business fax number. You should have a professional email address and website. A lot of these companies, if they are manually reviewing, you will look at your physical website. So you need to have a real website. It needs to look good. It needs to look professional. And you need to have a professional email address. What do I mean by professional email address? Look at mine. Mine is ty@creditsuite.com. And that mimics our website, creditsuite.com. You can nowadays go to GoDaddy and get the email addresses free with the domain, so it doesn't really cost any money. What you don't want to use is an AOL or a Gmail type of account, because if you use those type of accounts, that's just not someone with a credible business from the lender's eyes. So that'll be a reason for denial right there. You need proper licenses for your business, your industry, your city, your county, your state. Okay, you can't go in as a non-licensed contractor and start building business credit, because when they see you don't even have a proper license, then nobody's going to want to issue you credit because they don't see you as a legitimate business. You have to have an EIN number, you have to have an entity set up, and you need a bank account. Okay, these are basics of any business. If I'm going to start a corporation, the very first thing I do is I go to a website here in Florida called sunbiz.org, and I set up my corporation. Then I take that corporation and I get my EIN. Then with my corporation and EIN, I set up a bank account. I mean, those are really three of the most basic steps any business should take to get started. Set up your entity, build your EIN, or establish your EIN, and build your bank account. There's actually 20 of these items. I don't have time in this one show to be able to go over all of these different items, but there's about 20 items that you're really going to want to look at. And again, if you check out my YouTube channel, for example, then you'll find a lot more insight on this credibility test that you need to go through. But I just outlined with you a lot of the major points that you need to know and comply with in order to get approved for real business credit. Now, the first thing you want to do is get approved for vendor credit first. So once you know that your business is set up credibly, it's time to start building real business credit. Now, when establishing business credit, there's actually 3 types of credit you can get that you need to know about. And this is important because you're going to probably see these advertised, promoted, mentioned as you're building your business credit. The first is called vendor credit. These are starter accounts. These are accounts that anybody can get, even as a brand new business, and they report to the business credit reporting agencies, but they're not like revolving, like regular credit cards. They offer net 30 terms instead of actual revolving account terms. Store credit cards, very similar to what you're familiar with now. Target, Walmart, Home Depot offers credit cards you can use in their stores. That's store credit. Then you talk about cash credit, which you'll hear about quite a bit. These are cash credit cards: Visa, MasterCard, Amex, Discover. And I say all 4, but in reality, Discover's really not doing much in the business credit world right now, and Amex is very hard to get. But Visa and MasterCard are very common. So this is called cash credit. Vendor credit, starter accounts. Store credit are accounts you can only use in stores, and cash credit or Visa, MasterCard accounts you can use anywhere. Well, the biggest mistake entrepreneurs make when building business credit is they try to apply for store or cash credit first, and they skip vendor credit. But stores and banks will not approve a business owner for credit until their EIN credit profile and score are established. This isn't just business credit. It's this way in the consumer credit world too. If you had no credit report at all, no credit linked to your social, and you went into Target and applied, you would get denied. If you went into your bank to get a $5,000 credit card with no credit established, you would get denied. You have to have credit to start going into stores and banks and getting money on the consumer side and in the business world. This is why you have to start with vendor accounts. If you try to apply for store or cash credit without an established business credit profile and score, you'll be denied 100% of the time. I got one of these comments on my YouTube channel also. Hey, I went to Best Buy and I got denied. Yeah, of course you did. You started with Best Buy. You started with a store. No, I thought that was a vendor account. It's not a vendor account. That's a store. So if you apply with store credit, you'll always get denied. The key to success is you have to start with these vendor accounts first. So you must get approved with vendors first who offer these kind of net 30 terms. Then after you use those accounts, remember the cycle, use the accounts, pay the bills, they get reported to the reporting agencies on the business side. Then and only then will you have an established business credit profile and score. And once your business credit's established, you can then start to get approved for store and revolving credit. So the next two types of credit open up in order: vendor, then store, then cash credit, but the key is to start with vendor credit first. So you seek out vendors who will approve a business for credit even if none is established yet. There are actually many vendor sources who will do this and are known for this, and let me give you some of them. Uline is one. They sell packaging, shipping supplies. Quill sells office supplies. Reliable sells office supplies. Lockwood and Associates sells corporation type services, minutes, corporation setup, those type of things, just to name a few. Now, of those right there, I think that could count as 7 to 10 accounts because of who they all report to. So there's, 4 accounts right there. And again, you can check out my YouTube channel where I even give you even more. I just don't have time in this event to go through all of them. But those are some starter vendors that will give you initial credit to get started. To start business credit, you first get approved for accounts with these vendors. Some will require you to purchase products for them as part of giving you a credit line. Some of them won't. And some will have you make 3 orders to pay. Like Quill will have you order from them 3 times before they'll actually approve you for a vendor account. Some won't. Okay, but all the sources I listed will approve a brand new business, even if you have no credit now. So I just gave you real starter accounts that anybody can get, even if you have no credit profile, no credit score established now. So you'll want to ensure you have a total of 5 payment experiences reported before you even think of moving on to store credit. Now, a payment experience is the reporting of an account to a reporting agency. That's what a payment experience is. So Quill, for example, reports to D&B and Experian. So that would actually count as 2 payment experiences, even though it's 1 account, because that 1 account reports 2 places, so it counts as 2. Now, Lockwood and Associates, for example, only reports to Experian, so they only count as 1 payment experience. So that's why I told you of that list that I gave you, that's about 7 to 10 payment experiences, because some of those report to multiple reporting agencies, and you only need 5. So I've given you more than enough there. Now, you're going to want to know if your payment experiences are being reported and when they are, because that's what prompts you to take the next step to move on to store credit. So get and review your business credit reports as you watch this process. You kind of have to, because in order to get approved for store credit, you need 5 payment experiences. Well, how do you know when those are reported? Well, you only know if you have access to your reports. To get cash credit, you need 10 payment experiences. Well, how do you know if they're reported? You don't unless you have your reports. So you can go right on our website. You can go to Dun & Bradstreet, Experian, and Equifax Direct, but we make it easy because we just put the Dun & Bradstreet, Equifax, and Experian on our website, and we negotiated discounts for them. So you can get discounts on our website that you probably won't even get if you go to Dun & Bradstreet directly. So you can check it out, creditsuite.com/reports, and there you can get Dun & Bradstreet, Equifax, and Experian reports. You don't need Equifax, but you should get Dun & Bradstreet. You should get Experian also. So once you get 5 payment experiences reported, next you can start to get revolving store credit accounts for your EIN. Now keep in mind, all applications are going to ask for your social security number, but you do not need to provide your social on the application. I sometimes hear this. People say, look, I don't think business credit works because they always ask for my social. They always will, because they want to see if you'll give it to them, because if you give it to them, you're personally guaranteed them business debts, and they're happy. But it doesn't mean you have to supply it. If you don't supply it, they will not pull your personal credit. But if you do supply your social, they're going to pull your personal credit. And if your credit's bad, you're going to get denied. So don't put your social on the application when you're applying for store credit cards. Only put your EIN. And if you've gotten your 5 payment experiences and have established business credit, let your EIN credit carry the way, not your consumer credit. When you leave the social blank, they will pull your business credit. And once they see that you have business credit established, have those payment experiences, then you'll start to get approved for store credit, even with your social security number being left off of the application. Now, most major retailers offer business credit as well as consumer credit. Staples, Office Depot, Home Depot, Lowe's, Target, Walmart, Costco, Sam's Club, Radio Shack, Best Buy, BP, Chevron, Amazon, Shell. We've got, I think, 100 to 200 of these available to our clients. So obviously, I don't have the room to put them all here. What I can tell you is that most major retailers offer business credit. Now, again, some sources like Home Depot have more stringent requirements, like they want you to have big big revenue and time in business, but most of those sources do not. If you have established business credit, they will approve you. Now, first of all, let me give you a little warning. I'm a little over here. This is the first time I've ever tried to do a show in 30 minutes. It looks like I failed. It looks like it's going to take me about 35 minutes, so hopefully you'll be patient and still hang out with me here as we finish the next handful of slides. So, warning. Do not put your social on the application. Did I already say that? Well, I'm saying it again. It's that important. Do not apply for revolving store credit without having at least 5 payment experiences reporting to the business credit reporting agencies first. If you do either of these, you're going to get denied, or you'll have to give them your personal guarantee. I cannot say the importance of this enough. Don't put your social on the app when you're applying for store credit. Do not apply for revolving store credit before you get vendor credit first. These are the 2 biggest mistakes I see people make, and this is why they get denied and why they fail building business credit. I'm trying to help you avoid these mistakes before they even begin. So do not put the social on the app for store credit. Do not try to get revolving credit without getting vendor credit first. So once you have 10 payment experiences reported to the business bureaus, then you can start to get cash credit cards. Now, cash credit are those issued by Visa, MasterCard, and American Express, and are cards you can use anywhere, not just cards you can use in one store. It's recommended that at least one of those 10 payment experiences has a high limit of $10,000 or more before you apply for cash credit. So we really have 2 requirements before we tell our clients it makes sense to start getting cash credit. 1, you need 10 payment experiences. 2, one of those should have a $10,000 high limit or not. Dell is a great source who regularly approves business owners with established business credit for an account limit of $10,000 or more. So once you have 5 payment experiences and you're ready to move on to store credit, make sure Dell is one of your 10 payment experiences that you get, because Dell usually will approve you for $10,000 limits. A lot of our clients get approved with Dell with $10,000 limits, but again, you've got to have those payment experiences to even start to get to that point. Now, KeyBank and Home Depot are 2 sources that offer revolving cash credit cards you can use most anywhere. Home Depot offers you a store credit card that's hard to get. They also offer you a revolving credit card you could use anywhere. Like you could use it at Lowe's if you want to use it at Lowe's, or you could use it for surfboards or whatever else you want whatever you want to buy. So those are 2 sources that will give you actual cash credit that's linked to your EIN, and a lot of banks offer this also. Just keep in mind before applying, you have to have 10 payment experiences, and one account should have a limit of $10,000 or higher before you're actually going to be able to get to cash credit. Now, when you follow these steps, your business can have an established business credit profile and score, and this profile and score can then be used to get you credit in your business name, regardless of your personal credit and without a personal guarantee. And then you'll want to continue building business credit. So you want to continue applying, getting more credit, using the credit, and getting approved for higher and higher credit limits. People ask me all the time, how long does it take to build business credit? It's a never-ending process. The reality is you never want to stop. You always want to continue building your business credit, as you're always going to continue building your consumer credit. And the more credit you get, the higher and higher and higher your credit limits will be. Walmart's high credit limit is $50 million. You may never have one that high, but you can get very high credit limits once you build more and more and more credit. So once you start this process, never stop. So that's it, 30-minute segment. First time I've ever done that today, and hopefully you got a lot of good information out of this. I'll check out YouTube to see my actual feedback when this is available a day or 2 from now, but hopefully you got a lot of information out of today, because we talked about what business credit is, benefits, the difference between consumer credit, how it gets started, how to avoid the big mistakes people make. We even outlined the exact steps to build business credit. Make sure your business is set up credibly, how to get vendor credit, how to get your reports, how to get store credit, cash credit. So you just got a real quick run through of exactly how to do business credit. And if you need any more help, feel free to reach out to us. Right there is our information, creditsuite.com/business credit. Our contact number is 877-600-2487. My email is ty@creditsuite.com, ty@creditsuite.com. And again, check out my YouTube channel too. There's a ton of additional information on each one of these segments we talked about where we go into a lot more detail. You can easily search my name, Ty Crandall, Tycrandall on YouTube, or you can search business credit, and I figured out the other day I was 40% of the first page on YouTube with business credit videos, so you can easily find me there. So check us out online, get a lot of information about business credit, and check out my free resources on YouTube to get even more. And hopefully you'll go through, follow the steps in this actual show that we outlined, build your business credit. And because you attended the event today, then I will also make sure that you have a playback if you're attending live, and this will also be available probably later in the week on iTunes as available for a podcast. So you can easily put it right on your mobile device and take it with you. So again, this is Ty Crandall. Thank you very much for taking the time to attend this event. Hope you have a great day.